Hello and welcome to Explain the Charts, your channel for no-nonsense technical analysis. Today is Monday, October 13th, 2025, and we are looking at a pivotal moment for the Nasdaq 100 ETF, ticker QQQ. The market is reeling after a massive sell-off this past Friday, and there's a lot of fear and uncertainty in the air. Before we dive into the charts, let's quickly cover the news that's driving this chaos. Late last week, headlines broke about former President Trump threatening to impose a staggering 100% additional tariff on all Chinese goods come November. This news immediately sent shockwaves through the market as fears of a renewed, intense trade war rattled investors. This comes at a time when the market was already feeling a bit frothy, with many analysts debating a potential AI bubble after a massive run-up this year. We also have ongoing uncertainty from the U.S. government shutdown, which is delaying key economic data and making the Fed's job much harder. Finally, we're seeing a flight to safety, with gold futures recently surging to all-time highs above $4,000 an ounce, a classic sign of investor anxiety. Now, let's look at how this has impacted the price action on the daily chart. For most of the last year and a half, QQQ has been in a beautiful, strong uptrend, consistently making higher highs and higher lows. This entire move from the low 400s has been largely fueled by excitement around artificial intelligence and strong performance from mega-cap tech. Price climbed steadily, eventually pushing to a new all-time high just last week. However, what happened on Friday, October 10th, is a major cause for concern. This massive red candle you see here represents a single-day drop of over 3.5%. Notice the huge increase in volume at the bottom. This was one of the highest volume days in months, which tells us there was significant conviction behind the selling. This is what we call a bearish engulfing candle, as it completely erased the gains of the prior days and closed near its low, signaling a powerful shift in momentum. To get a better sense of how Friday's session unfolded, let's drill down into the 15-minute chart. Here we can see the price action for just that day, October 10th. The day actually started with optimism, pushing up to a new all-time high of approximately $613. But in the early afternoon, the tariff news appeared to hit the market hard. You can see the reversal starting around 14:45 Universal Time Coordinated, with a sharp move down. What followed was a waterfall decline as selling pressure accelerated dramatically through the 1500 hour. The price sliced through the psychological $600 level with almost no hesitation. This wasn't a slow bleed, this was a panic-driven sell-off, with buyers completely disappearing in the face of overwhelming selling pressure. The market eventually found some temporary footing near the 589 level into the close, but the damage was already done. Now, let's go back to the daily chart to identify the critical levels we need to watch moving forward. With this massive reversal, the entire market structure has shifted. The old support levels have now become new resistance. The most immediate and critical resistance level is now the psychological $600 mark. For bulls to have any chance of recovery, they must reclaim and hold above 600. Above that, the all-time high around 613 stands as the ultimate ceiling. On the downside, the immediate support is the low from Friday's session, right around $589. This is the current line in the sand. If bears can push the price below 589 and, more importantly, get a daily candle to close below it, the door opens for a much deeper correction. The next major support zone below that appears to be in the 575 to 580 range, which was an area of consolidation back in late August and early September. After that, we could be looking at a test of the 560 level from early August. It's crucial to watch these levels as they will likely act as major inflection points for price. So, what's the outlook from here, both short and long term? In the long term, the uptrend is still technically intact, but it is now under serious threat. A break of the recent swing lows could signal a major trend change. Short term, the picture is definitively bearish. The sellers are in complete control after Friday's powerful move. Let's outline the bull and bear cases for the coming week. The bullish case, which seems less likely right now, requires price to hold the 589 support level. We would need to see a strong bounce from this area, followed by a decisive move back above 600. This would likely require some positive news, perhaps a walking back of the harsh tariff rhetoric to fuel such a recovery. The bearish case, which currently has the momentum, is that Friday's sell-off was just the beginning. In this scenario, we would see a break and close below 589. This would confirm the bearish momentum and would likely lead to a swift move down towards that 575 to 580 support zone. The combination of geopolitical news and the chart's technical breakdown gives this scenario a high probability in the immediate term. It's a time for extreme caution, as volatility is likely to remain very high. So to quickly recap the key takeaways for QQQ. The market's primary driver is the tariff news, so keep a close eye on those headlines. The bears are in control as long as the price remains below the $600 resistance level. The critical support level to watch is 589. A daily close below 589 reinforces the bearish case with a high probability of seeing 575 to 580 next. For the bulls to make a stand, they must defend 589 and reclaim 600. Given the force of the sell-off, I would place a 70% probability on at least a test of lower levels in the coming week, unless the news catalyst is completely reversed. Trade carefully and manage your risk. Thanks for tuning in to Explain the Charts. If you found this analysis helpful, please like and subscribe for more updates. Remember, this content is for informational purposes only and is not financial advice. Always conduct your own research and make investment decisions based on your own individual circumstances.